there, folks. Welcome into today's video. You know, I've been so caught up into covering everything that's going on in the market that I haven't even really been covering what I'm up to in the market, what my plans are in this market right now, and those sorts of things, because it's been a dramatic market. There's been so much news coming out. There's obviously been, Russell hit bear market recently and has come out of bear market now, and Russell's been trending pretty well the last couple of weeks. But there's so much going on with the Fed, inflation, there's a lot of drama. There was a Russia situation, and I thought let's just do a video where we talk about what I'm up to in the market and what my plans are over the next month or two. Hope you guys enjoy this as always. If you're not already subscribed to the channel, make sure you hit that subscribe button. It's absolutely free to do so, to subscribe to the channel. I just want to start out here at the top talking about this. Hungry Bowl, they put this out on the app today. A year ago today, Cathie Wood's ARK Innovation Fund hit its peak. Yes, literally today, 1 year ago, the ARK Fund hit its peak, its all-time high. It's incredible. And here today, it's about half the value it used to be. Actually, it's less than half the value it was at this time last year. This exact day, a year ago, $154, and now it's obviously less than half of that, and that's a massive move for an ETF. It just shows you, I think it's just another thing to look out there at how devastated anything seen as more of a riskier play, growth plays, anything like that's just been absolutely devastated. And the ARK Fund is just kind of the face of, I guess you could say, of that devastation out there. It's been nasty. You know what's not nasty is getting some free stocks from Moomoo, the professional trading platform. Check out pinned comment down there. Even got a deal right now. Deposit $100. Get a free TTCF share. It's no better than that, okay? So let's get into what I'm up to in the market, what my plans are, all those sorts of things now, okay? So first off, TTCF. So they've got to report earnings. They'll probably report earnings, I would say, in the next 3 or 4 weeks. You know, I've got to keep some money on the sideline for whatever happens here with TTCF. The stock bottomed out recently at $10.89, right? I've got to keep some funds around just in case this makes any move down. The thing, there's a few things that there's two core things that make me really, really confident that TTCF's probably not going to move down. With that being said, I'm still keeping some capital around just in case it happens, okay? One is I'm extremely confident the numbers are going to be good, the guidance is going to be good, and all those sorts of things. Like I look at what they have coming out into stores, how many new products are coming out into the new SKUs, the new products they're going to have coming over the next few months, and I see all this, right? And so I'm very, very confident in the numbers this company's going to put up, not just over the next quarter, but over the next several years. So that makes me pretty darn confident in terms of its stock price and those sorts of things. The second thing that makes me actually pretty confident that the stock's not going to go down in any meaningful way, and when I say meaningful way, I mean 10% plus down. And like I said, if that happens, cool, I'll be ready to buy. It's hard for me to see that. If we look at volume's dead on the chef. Volume's completely dead on the chef. The truth is, when it comes to chef, and this goes for a lot of these smaller cap companies, to be quite honest right now, many of these companies, any of the weak hands or folks that were playing this, maybe got in the market just for a short amount of time and then didn't want to do it anymore, something like that. Most of these people are gone now. And you see that in the trading volumes. And what we're going to see with some of these stocks we're going to go through here is there's no trading volume on them. I mean, 593,000 shares traded today. Average volume's 1 million. The stock was up today on, a day that the market wasn't doing good. The stock was up yesterday on a day when the market wasn't doing good, right? Stock went up after hours. After hours is down. So across the board, this is just one of those stocks that, where are the sellers at? Where are the sellers at now at this point in time? And, when it comes to an earnings like this that they're about to report, I mean, at the end of the day, I think the longs, none of us are changing our minds about this company. We know what's going on here. We're excited for the future. If anything, we're buying more shares and acquiring more ownership of the company, and we'll continue to acquire more ownership of the company. And in terms of, traders, this isn't an attractive stock to trade. It's just not. It hasn't been doing much. It just, where's the volume? Where's the trading activity? So now at this point in time, we pretty much just got longs, and then a few people that always have to sell shares. That goes with every stock, and that's just kind of that when it comes to chef. And so the good news for the chef is, if this really gets any serious momentum around it, and this could be said for a lot of these small caps, my gosh, the move's going to be absolutely insane, because of how little trading volume there is on the stock. If you had a mass buyer come in and want to acquire, let's say, 10 million, 20 million shares of the stock over the next, let's say they want to do that over a 3-6 month span. My gosh, what that would do for the stock price is just crazy. Even a buyer that might want to come in to acquire 1 million or 2 million shares, it would take quite a while to kind of fill that out, and it would just be immense buying pressure day after day after day, week after week after week for an extended period of time to really build out that position. Because obviously you can't just buy them all at once. You send the stock price like up 1,000,000%, right? When maybe not that much. So yeah, I'm keeping some money just in case this one goes down in any meaningful way. I don't think it's going to happen, but I'll rather be prepared just in case it does happen. Okay. Next one, keeping some money around for the planet. There's another one of those I look at and I'm just like, in case it goes down, let's say back to the 270 range. It actually bottomed at 235, which is just crazy. 52-week high on this one, 787, $600 million market cap. Now, to refresh people on the planet when it comes to the numbers that are expected here, current year, over 100% revenue growth. Next year, 54% revenue growth, and then a huge increase of profitability of almost 10xing EPS essentially next year. Next year, as far as EPS, it gets really, really darn confusing because they're supposed to open several stores during the course of 22. There's like a ramp time, essentially, that happens with these stores. So that's the one thing I'm honestly concerned about. I know revenue growth is going to be incredibly strong. I'm expecting anywhere from 40% on the low end to 60% on the high end. But EPS could be confusing. I'll just be honest. The Vegas store has been doing phenomenal from every time I've ever seen it. Over the past 6-9 months, it looks busy down there. The OC stores continue to ramp. So everything as far as the fundamentals is going great from everything I'm seeing. They're continuing to distribute their brands. They got more stores coming, Florida, Illinois. So I'm excited. But, who knows? You never know what can happen with these stocks in the short term. There's another one of those that there's no volume on this stock. So I'll be ready just in case it drops in a meaningful way. I don't think, this is another one of those, there's no one's trading the planet. At this point in time, the only people that own the planet, and by the way, this one, I don't know if you guys saw the volume. It was, rewind the video a bit if you want to see the volume, the average volume. It's like so ridiculously low for the planet. It's insane. The only people that own the stock now are long-term investors in this one, are in this because we believe it's going to be a 10, 15, 20, 30, 40, $50 stock over the coming years. And they're going to be a massive player in a massive industry that's continuing to grow in federal legalization. It's just a matter of time here, okay? Keeping somebody around for Honest in case this one moves down in any meaningful way. Another one that I think is pretty unrealistic to see any meaningful move down, but keeping some capital around. This one has a little better volume than some of these other stocks. Like look today, almost 1.2 million shares traded, 1.9 million is the average amount there. This is one of those that, it's a triple bagger, quadruple bagger over the coming years. And it's just been completely devastated. This stock's going back to 20 to 30 over the next few years. Net income on this company, I think they're going to scale to 50 mil plus in a matter of a snap of fingers here. They've just had to get through the IPO, that transition into becoming a public company. They're about to flip this business over the next several quarters to a profit business from a loss business, which is going to be massive for the shareholder base. And then as they start to consistently get profitable, I think they'll be able to even enter things like the S&P 600 small cap over time and just continue to widen their investor base, get people more interested in this one. I think the flip to profitability in this one will be the biggest thing for them because a lot of people that want to own, think about the products they sell: diapers, wipes, beauty products, those sorts of things. At the end of the day, people want to see those business models be profitable. So I think this one, getting to profitability, is going to be the biggest change for the stock price you could possibly find. And as they get closer and closer, I think the stock price will start to increase because people will start to realize, oh man, they're about to flip this baby to profitability. And then when they actually start doing it and they start putting up positive EPS numbers, it's going to be a game changer for Honest stock. Then you add on top of that just a rotation of money to small caps, which has been needing to happen. And I'm feeling very, very darn comfortable keeping a little capital around in that one just in case there's any meaningful drop in that one. It's one of the companies I feel most comfortable with. Oatly. So Oatly, this one's a newer position for me. They're supposed to report earnings on March 9th. I love Oatly. I use a product every single day of my life now. It substituted milk for me, essentially, and that's amazing because I used to drink an insane amount of milk, and now I just drink Oatly strictly. And when it comes to Oatly, this is a growth beast. I mean, we're talking, 50% plus growth next year. This is one of those companies, I think they're going to grow top line 30% plus this entire decade. Like literally, I don't see any time in this decade where they're not growing 30% plus. Like that's just how crazy the growth is, opportunity for this company is on a worldwide basis. It's insane. The amount of products they're going to get to over the next few years, it's ridiculous, okay? And so when it comes to this, look at the volume. There's no volume on the stock. It's half its usual volume. 2.2 million shares traded today out of 4.4 million on a fairly volatile day in the market, right? But when it comes to this one, a little bigger market cap here, 4.6 billion. I got to keep some capital around just in case this one goes down. It's pretty significantly off its 52-week low. 52-week low on this one's 611. It's trading at 780. So I'm keeping some capital around. Of the stocks I hold, this is the one I feel like there's the highest probability it could go down on earnings, even though I feel like that's still a pretty fairly low probability. This one is the difference between Oatly and maybe the Chef and Honest is the Chef and Honest can likely flip to some sort of profitability at some point in the next, let's call it 4 quarters. I don't mean consistently, but at least hit a quarter. Oh, we made a little positive EPS here, right? Oatly, I don't really see that. They're going to spend so aggressively on everything with their business because their revenue growth is so crazy. Honest is a much lower growth company. Tattooed Chef is a strong growth company at probably 30% plus this upcoming year. But there's a difference level when you're talking about Oatly that's probably growing 50% plus revenues top line this next year. When you're growing at that rapid of a clip, it is very tough to have a profitable business model, I can tell you that much. And so I think Oatly is going to have trouble eking out any profits in the short term. Not that it matters to me. I mean, at the end of the day, it's too big of an opportunity to say, I don't want a piece of Oatly. Like this is way big of an opportunity. So, but yeah, that's one I'm thinking like, hey, maybe something goes down there, and I would obviously be somebody that is adding shares. Okay. Now, so small caps, all my small caps are basically reporting earnings in the next 3 or 4 weeks for the most part. Yeah, pretty much. I think all those companies I just talked about there, next 3 or 4 weeks. Now, let's say we get over this next 3 or 4 weeks, all those companies report, let's say all the stock prices go up. None of them go down in any meaningful way, right? Cool. I mean, most of those positions are already built out. Like I don't have to buy more shares. I'm willing to buy more shares, but I don't have to. But let's say there's a scenario where all those go up. Okay, well then in that scenario, I'm putting more money in PayPal then. PayPal's a stock I just started buying here very, very recently. It's, this stock was just a few months ago. Like, look at this, 5 months ago or so, 6 months ago, this stock was $300, $110 today. Such a great business model. PayPal is consistently, PayPal and Venmo are consistently at the top of the App Store for the most popular apps. Right now, there's a few, tax-related products that are up there because it's tax season right now, and a lot of people are filing their taxes. But, essentially, when it comes to PayPal, they're almost consistently number 2 and number 3, PayPal and Venmo, in terms of the most popular financial-related apps in the world. And this business just continues to grow, acquire new customers, make more money, more revenue, better EPS, and their long-term opportunity is crazy. Now, the one difference you'll see in these sorts of stocks versus those small caps I just ran you through, volume is active on these stocks. Almost 29 million shares traded hands in PayPal here today when average volume is 18.8 million. And that's on the back of no news, okay? These mega caps, they are actively traded. They still are, PayPal's still trying to find a bottom. It still hasn't found its bottom yet. That's just amazing. That's just amazing to me that it's fallen this dang much. For this great of a company to have fallen this much is wait for it, nothing short of extraordinary. Nothing short of extraordinary. Smash a thumbs up for that one, okay? It's nothing short of extraordinary in all seriousness that this one has fallen this much. And so this is one that I'm more than a happy buyer of here, especially if those other stocks go up. Shopify, I gotta say, I'm not quite there with adding to Shopify, but if we get through small cap season, I don't add in any aggressive way with any of those stocks, and Shopify continues to downtrend, I'm gonna end up buying some dang Shop, okay? This one's, I don't even want to say it, okay? I'm not even gonna say it, but it's crazy, okay? November 19th, this stock was $1,700 a share. That was 3 months ago. This stock is $700 range today. $700. This stock has fallen around $1,000 a share in 3 months. It's incredible, like absolutely incredible. The fall for Shopify is insane. Now, keep in mind that they had a one-time kind of cost adjustment situation, so it helped out their profitability look a lot better than it is when it came to this investment gain. But basically, they're not nearly that profitable, so don't get too excited when you see a 27 for Shopify. It's like, what? Yeah, look at their forward P, okay? But at the end of the day, when I look at Shopify, I'm looking at the stock super active. Look at today, 9.7 million shares traded out of 1.7 million average. If PayPal, Meta, some of these companies are still having trouble finding bottoms, who's to say Shop's going to find one anytime soon outside of the NASDAQ starting to go the other way? So when I look at Shop, this is one of those it's been devastated. I wouldn't be surprised if it continues to get devastated in the short term with all the Fed stuff and how many, Wall Street going crazy with how many times the Fed going to raise rates and what that does for super high growth, high valuation names like a Shopify. So this one I'm waiting in the wings. Definitely a possible buy for me, especially if let's say PayPal starts to go up and those other stocks, the small caps report good. I'm ready to make a move there. Meta. So Meta, a lot of people are saying this is dead money for the next year. I can't say those people are wrong. What I will say at the end of the day is this is freaking Meta. Okay, this is going to be a multi-trillion-dollar market cap. When you think about their platforms, they're going through a lot of crap in the short term. The iOS changes, Google changes. That's hurt their business in the short term. But the thing is, that's going to hurt for a year. And then those comps go away. And then you start, having your business actively growing. Now, when it comes to Meta, all these big guys are trying to attack them, right? And that's really why they're doing this, all these changes, right? They're trying to hurt Meta because they're scared of Meta, flat out. And if you didn't know, Meta's stealing away, essentially, a lot of the best employees of a lot of the biggest tech companies in the world right now. They're paying them way more than they can make other places, and they're stealing a lot of folks away. And there's a war going on between big tech right now, and specifically between Apple, Google, and Meta. And Meta's learned that they need to control their own platform. They need to control their own destiny. They can't just be built on the back of these things. And so, is this the most exciting stock for the next year? No. And are they spending a fortune on Meta, the metaverse right now? Yes. And that's not going away anytime soon. But the fact is, they are the most well-positioned company to win the metaverse. And I'm telling you, that's a multi-trillion-dollar opportunity in itself. And this company already has a great business model that's a profit and cash flow machine. So this is one of those I'm also looking to make that a bigger position than what I currently have it now. That's what I'm planning on doing with my money, guys. Hope you enjoyed this as always. Once again, if you want some free stocks from Moomoo, the professional trading platform, check out my pinned comment down there. And you deposit $100, get a free TTCF share. It gets no better than that in life. Take advantage of that before that promotion ends. Make sure to subscribe to the channel if you're not already subscribed. Much love. Let me know the moves you're making in the market, and have a great day.